Hey everyone, today I'm going to be doing a deep dive on Microsoft, so let's get straight into it. Basically, Microsoft is a company that everyone knows. Every firm, every bank, every major company uses Microsoft in some way. Either they're using Windows or Excel, something along those lines, but pretty much everyone uses it. That's actually a pretty good question. Let me look up what percent of companies use Microsoft, and 80% or more of Fortune 500 companies use Microsoft Cloud Services. So, that's like a huge amount. You already have what, like 83% of all companies using them, which is kind of like a crazy monopoly because it's not like you're at a company and you've been there for years and then all of a sudden they're going to be like, oh, we're changing our operating system to, we're going to get Macs for everyone. That's not going to happen, or they're not going to change over to Linux, which is why Microsoft has such a tremendous moat because all of these companies are not just going to switch um, to a different platform. My company, if every day I'm using Microsoft Excel, I have my macros saved in there, all these past like 20 years of Excel files that I need to use, or like you're not going to change. Basically, my point being is that these companies that use Microsoft, they are so dependent on them, their Excel, their email, their operating system, everything depends on Microsoft for this. Teams, like if you're at a bank and you're using Excel, you're not going to change to Google Suites because your company's cheaping out. Microsoft could charge whatever they want for their products, and pretty much every major company would have to pay, or they would have so many issues going forward. It's just worth them to lose the money if Microsoft decided to charge more. So I'm just looking here at the revenues. So I do have Microsoft as like a 2% position, but Microsoft recently had a dip. Go to 3-month chart. Down 16% on 3 months. In the past year, you could see it had this crazy dip after earnings, down 20% from its highs. Is this a buying opportunity? That's pretty much the question I have and what I'm looking to figure out. So let's take a look at the financials here. Revenue growing at around 13 to 16% on average. Profit margins pretty much flat. Now, the reason why they're tanking is because of this chart. So this is their CapEx, the CapEx percent change since 2016, increasing each year, 58. And then all of a sudden this year, they just increased it dramatically, spending on OpenAI, which is the big reason why that people are getting skeptical. And it dropped 12%, which is like it's one of its worst days in history. So this CapEx chart is actually what has been a factor to them having that big drop off. Looking at this at like first glance, it honestly doesn't even seem that bad. Like if I turn this into a bar chart, like the percent change of CapEx isn't really that crazy. I've had years in the past like this and Microsoft has been fine. Then there's also this, and it's 45% of Microsoft's backlog for Azure, their cloud platform, is OpenAI. Has investors being like, oh, 45%. That's a lot of weight on OpenAI for a company that barely makes any money. Um, so obviously very, very skeptical there. However, even though it's 45%, it's still cloud computing backlog has grown 110% over the past year. But Microsoft is currently trading at a 22 forward PE. Crazy for a company that has this big of a moat. We did hit the double top here and we were kind of going down. So this is kind of the chart we're looking at, 50-day and 200-day moving averages. It doesn't honestly have any like support the stock. There's nothing really for it to bounce off of. Like I would say this line right here. So kind of just like looking at the chart now, there's not really any support. The 200's kind of out of the way, and so is the 50-day. I would say best bet is like this area right here where it seems to have like a good amount of like resistance. Like if I just add like a line, maybe it will go down to like the $400 area, cut right through this top part here. We have that area where it's just kind of like dove through. So I wouldn't be surprised if it jumps down to like the 400 area and then we see like a recovery after that. This is really one of the best companies around. It's super safe. You don't have to worry about it. You could sleep well at night, not stress about like, oh, like what's going to happen. In the end, Microsoft will work out. Looking really quick at their past like PE ratios, the lowest they've really traded at is 24. I would say on average it's high 20s, low 30s. Company shouldn't be re-rated. Look at how much money this company makes. I mean, just constantly growing at the size it is, and it's growing 16% past year. Still, just like constant growth from this company, and you don't need to worry about it. I mean, overall, this company has been rated a safer bond than the United States government. There aren't many companies I could say that. This company's not going anywhere. I would wait for it to get to those lower recovery levels before actually buying more into this. But again, great company, great stock. So yeah, overall, Microsoft is one of the best companies around. I don't think there's any arguing to that. Their product is incredibly sticky. I don't think anyone's going to unsubscribe because they increase prices. They're staying around. Their customers are forever. At this dip here, I really do like the price. I mean, 22 forward P. I mean, it's not bad. It kind of reminds me of Google a few months ago when I was buying it, back when Google was like around here, like trading at like 160-ish, and then like, it was kind of like dropping, and then it was trading at like a 18 forward P, I want to say, something like dirt cheap, and then it just like ripped up. But yeah, it's Microsoft. What more is there to say? So that's it, guys. See you in the next one.